Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. In this video, we'll discuss the conflict between Israel and Iran and what it means for global financial markets. In times like these, it's important for investors to maintain perspective. What began with Israeli strikes on Iranian nuclear facilities and military targets on June 13th has led to retaliatory attacks. While the situation is still unfolding, recent reports suggest that Iran may be open to ending hostilities and resuming nuclear program discussions. For investors watching these developments unfold, it's natural to feel concerned about the potential impacts on the market. A key question many are asking is whether such conflicts could escalate into a broader global confrontation that would significantly disrupt markets. In uncertain times like these, history shows that disciplined, long-term approaches tend to serve investors better than reactive decision-making based on daily headlines. Over the next few minutes, we'll explore these topics further. First, this chart tracks the S&P 500 price returns around major geopolitical events indexed to 100 at the time of the event. The x-axis shows the number of days before and after. Like the current situation, geopolitical conflicts have impacted oil prices that raised global concerns in the past, such as when Hamas attacked Israel or during the Iran drone strikes against Saudi Arabia in 2019. During these periods, markets typically recovered from geopolitical shocks. As this chart shows, markets tend to recover and do well over the weeks and months following disruption, even if there's significant uncertainty. What mattered more in these periods was whether the underlying business cycle trends remained positive. Next, as this chart illustrates, oil markets have experienced significant volatility in recent years, driven largely by regional conflicts around the world. When tensions escalate, oil prices often serve as a key transmission mechanism, showing how regional events can quickly impact the global economy. We saw this dynamic play out recently when Brent crude prices climbed above $74 per barrel when the Israel-Iran conflict broke out. While prices have since pulled back following reports of potential de-escalation, this volatility demonstrates just how sensitive energy markets remain to geopolitical developments. Higher oil costs translate directly to more expensive gasoline and transportation, which ultimately affects the prices consumers pay for everyday goods and services. However, it's important to maintain perspective on current price levels. Oil remains well below the peaks that we witnessed in 2022 during the early stages of the Russia-Ukraine conflict, when prices exceeded $120 per barrel. One factor that provides some insulation for the American economy is the country's growing energy independence. U.S. oil production now exceeds 13.5 million barrels per day, making America the world's largest producer of both oil and natural gas. Finally, this chart demonstrates that wars typically do not prevent the stock market from generating positive returns over longer periods of time. Historically, while markets may react to conflicts in the short term, they're ultimately driven by underlying economic fundamentals over the long run. For example, World War II actually jump-started industrial production following the Great Depression and helped propel economic growth for decades to come. Similarly, the Gulf War did affect oil prices, but it also coincided with the information technology revolution of the 1990s. Of course, we must acknowledge the serious humanitarian and societal consequences of these conflicts. In today's climate, much depends on whether conflicts expand or begin to de-escalate. When it comes to managing our finances, a portfolio aligned with long-term financial goals continues to be the most prudent approach for navigating periods of geopolitical uncertainty. We hope you found these insights helpful. If you would like to discuss the conflict, oil prices, or your portfolio in more detail, please don't hesitate to reach out. We look forward to speaking with you.